The business mileage rate is now up to 70 cents for 2025. My name is Paul Vasquez with Tax Lab. We help people become ethical millionaires. So, if you're a small business owner or you have a side gig, a side hustle, and you happen to have to travel a little bit for that, maybe you're even running errands for that business, running things to the post office, whatever it might be that is related to the operation of your business, you can count those business miles. Now, there is a golden standard of record keeping. You have to have a written record. This record does not have to be created at the exact moment that you're driving, nor the exact moment after you stop driving. It just needs to exist by the time there's a tax filing. Now, of course, this needs to be accurate and honest. But the gold standard is that you have some type of schedule somewhere that has the date of the trip, the beginning mileage, the ending mileage, the reason for the trip, and the total. Right? The difference between the starting and stopping mileage. And that's kind of the golden standard of that. Things that you can't include in business mileage is as soon as you begin a personal pursuit. So that means if you stop off to grab a jug of milk, or you pick up a friend or something like that, even if it's in the path of doing something that was once a business trip, that ends the business mileage for that trip. So don't think of it as a per trip thing so much as a per mile thing. So are you traveling that mile for business purposes? And you don't have to count the whole trip. You can count up till. So if you go out, and let's say you go and you check your P.O. box. Let's say you have a P.O. box where you get all your business mail. When you go out, check that P.O. box, and then on your way back, you stop off at the grocery store to pick something up for yourself, for your household. As soon as you park that car in the grocery store parking lot, that ends the business trip. So you get the mileage to the post office box, and then right to where you stop your business purpose. You pick up your milk or whatever it is, and then you drive home. That's all going to be personal at that point. So there are some key factors to kind of think about when looking at business mileage. There are some fantastic tax planning strategies that you can implement if you're a small business owner that have to do with the home office exception and the admin office exception. Depending on whether you're an LLC or an S Corp, can change the way you might want to structure this business mileage deduction and how that's handled, whether as a reimbursement to the employee or just a straight deduction on the tax return. So it's really going to depend on where you are in your business, what type of business you're running. And then on top of that, sometimes the mileage rate isn't the best. You get one or the other. It's either the mileage rate or the actual cost. And the mileage rate is supposed to be an amalgamation of all the business costs into one flat fee, so you don't have to sit there and track everything. If you're not tracking everything and you're taking the mileage, that means you cannot, in addition to mileage, try to write off your vehicle's fuel, your vehicle's repair costs, your vehicle's tires, your insurance, your taxes. All that might have gone into the actual cost calculation, you can't also then take the mileage deduction. This includes the cost of the vehicle. So I hear some business owners or small business people, or even people who aren't even running a business, say, "Oh, you should put your vehicle in the name of your business because then you can write off the cost of that vehicle." It really doesn't matter whose name the vehicle is if it's being used for business purposes. The cost of that vehicle is included in the mileage rate. So once again, either you're taking the mileage rate or you're taking the actual cost. If you do the actual cost, now you've got depreciation that you're taking in terms of that vehicle's cost. So you can depreciate that vehicle, but now you've got that 5 years that you have to keep that vehicle keep using that vehicle for business purposes. If you're planning on selling your business, if you're planning on selling your car, within 5 years from putting that car, starting to use that car for business purposes, and if you're taking depreciation, then you have to worry about depreciation recapture, where you may actually end up losing the benefit that you got previously. They're going to take some of that back because it's supposed to have at least a 5 year lifespan. And so a lot of times, regular depreciation, it's going to take a portion of that over the 5 years. Most people don't do that. Most people do accelerated depreciation, where they're trying to take as much value as they can, as soon as they can, on their taxes, and not drawing that out over the 5 years, which means if you lose that car as a part of your business within those 5 years, you may have to do a depreciation recapture. This is not the same with mileage. Mileage, you don't have to worry about depreciation recapture, even though it's kind of baked into that number, 25, 70 cents. You don't have to worry about the recapture. So unless your business is using more expensive vehicles for some reason, usually the mileage rate is going to be better. And what's great about the mileage rate, so the depreciation stops after that 5 year period, right? It's kind of, whether you're taking all that up front or at the end, it's kind of this 5 year calculation. What happens after the 5 years? Well, you've already taken the depreciation, a big chunk of that. And so now you're just down to the percent usage of that vehicle for the rest of the stuff. Whereas the mileage rate is kind of baked into that. It fluctuates with inflation. So for most of you, it's better just to take the mileage rate. They've got great apps now that help you track that. So if you need that written or printed record, you can use apps now. I would first start maybe with your car insurance app, because that you may already be getting that. If you have vehicle insurance, you may already have access to something that's going to help you track that and keep track of that for you. If not, your accounting software, if you have QuickBooks, your accounting software might be a place to look. If not, there are also even Google Maps has a mileage tracker. I believe it's free. There's some sharing of information, I think, with that, but there's plenty of options out there to help you track that mileage. If you want to learn the best way to do it for you and your business, go ahead to lab.tax, click on Advisory Services. Get your free 15-minute introductory phone call, and we'll see if our services are a right fit for you. I wish you guys all the success.